Hello, everybody, and welcome back to Retirement Redefined. I'm Brad Gotto, and as always, with me is Miss Carly Carlson. As we kick off the new year, we wanted to focus on something practical. January is one of the most underrated months when it comes to financial planning. It's not flashy, but it's very, very powerful. What you do early in the year affects your taxes, it affects your savings, and your flexibility for the next 12 months. So today, Carly and I are going to walk through tax prep. You can start now. Planning moves you can start now that are worth reviewing in January, and some opportunities people often miss until it is too late. All right, Carly, before we jump into the content, how are you?
I am doing really well. It's this is the time that we really gear up for tax season in our world, and so it's kind of exciting. We talk a lot about like climbing the mountain, and that's definitely we're on the upward ascent here.
I can't wait to talk to you post-April and see if you still feel as energetic as you do right now.
Yeah, I mean, talk to me like March 15th. That'll be about the worst, right in there.
Is that usually when it starts to kind of get you, March 15th?
Well, March 15th is the business deadline, and we're in the thick of all the individuals on top of it. So that like kind of middle of March is typically when we're working the longest hours.
As somebody that hates winter, in myself, not speaking for you. I can't imagine the winter doldrums that like the mental stuff I deal with by February. I just feel like every year I'm like, why do I live here? Dealing with that on top of, it being the busiest time of year for a CPA like yourself. But
no, I think because we can't go outside, like you have to sit at your desk and get a bunch of work done.
Yeah.
That you don't really miss what the weather's like. So it's actually kind of the perfect time. Where I get upset is when we have winter that extends into April.
Yeah.
So when it is like, April 16th and I am ready to go outside and it snows again, like that like I just tank pretty fast. And then I'm with you. Fair. I'm ready to move.
That's fair. Totally fair. Well, let's jump in. I believe we've got 6 things that we're going to talk about today, opportunities, things that are worth reviewing. So let's start off with number 1. Lead us off. Yeah. Lead the way, Miss Carly.
Okay. I mean, we just talked about how it's January and right at the start of tax season. So Brad, I wanted to kind of hear from your perspective why January matters so much from a financial planning perspective.
Yeah. I mean, the obvious answer there is because you have the most time. Right? The longer we wait to do anything in life, the less time you have to prepare. And sometimes you miss opportunities as well, or deadlines or things of that nature. And so this beginning of the year, in fact, I'm going to cheat a little bit because we kind of do this a little bit with our, we kind of get ahead of the game with clients. We prepare, if you will.
Yes.
January is a great time. And it's better than February and March to kind of start that planning. We actually kind of start dipping into the 2026 planning end of 2025. So we're like the person that, they give you a 90-day window to prepare. We kind of sneak in at like day 100. We try to get to the front of the line. But if you haven't done that, January gives you the most opportunity to kind of think through the year and kind of play things out. There are certain deadlines throughout the year. There's the obvious ones like tax deadlines that we know are still in front of us. And so it gives us that opportunity. And then on top of it, the markets haven't really done, it's a brand new year. And so we've kind of got a fresh look at what's going on in the markets. And so kind of setting a trajectory for expectations for the year, expectations for cash flow, expectations for tax planning allows us to kind of see the world the way we want it to work out so that we can take opportunities for the market as it kind of goes up and down throughout the year, distribution planning for tax purposes throughout the year, income purposes throughout the year. And if we build the trajectory, early, Carly, it allows us to change course. You don't know if you could or should be changing course if you don't have a course. You don't know if you should be course correcting. So for a planning perspective, I would make the argument it's imperative. If you're going to actually do financial planning and not just be reactive, to start early in the year, January obviously being better than February. If you wait to February, don't do nothing, right? Don't be the person that says, well, I didn't do it perfectly. But obviously, if you're listening to this podcast, it's January right now. If you haven't started, start now. Here comes the second question. Even though taxes aren't due yet, what should people be doing right now to start prepping? January.
Yeah, that's a great question. We talk a lot about planning at Fiat Tax and Fiat Wealth Management. And a lot of our clients were doing planning kind of mid-year and year-end. And our year-end planning, just like you were talking about for financial planning, is kind of this pre-preparing. So we're preparing for January. And that's because, fourth quarter estimates are due January 15th. So you might even have one more tax payment that's due this coming month. And so you might be finalizing that. Also IRA and HSA contributions can actually be made up until April 15th. If you're a business owner, you potentially have, until the extended due date of your return to make retirement plan contributions. So a lot of things happen within the calendar year, but there are a few things that kind of cross over years that you can still kind of take advantage of. So, evaluating those options and opportunities for your return. And then this is really January is the time to kind of get everything together for taxes. Filing season typically opens either the last week of January or the first week of February. The IRS kind of reevaluates and resets that date every year. But January is the time to kind of review last year's return, to evaluate kind of all of your sources of income and deductions, and make sure you have all of those documents gathered and ready for your accountant, or ready to self-prepare if you do it that way. And it's also a chance to look forward and say, okay, here was everything from last year. And now, what's changing in this coming year? Because maybe you need to make some withholding election changes. Maybe you got a new job or a raise, or we need to, reevaluate what you're doing for benefits and how you maximize retirement. Or maybe you bought or sold a home and there are just some new things that are coming. Yeah. And kind of getting in front of that with your accountant is really helpful. I love when clients are bringing me, all of their tax stuff, but also saying, and hey, in prep for next year, let's also talk about X, Y, or Z. Not just taking advantage of everything to kind of wrap up the prior year, but to then take one step forward and say, what changes are coming as best as possible.
Yeah. If I take anything, there was a lot of really good stuff in there. The one thing I really want to double down on and hope the listeners hear is that when you go to file your taxes with your accountant, preparer, CPA or otherwise, that you come not only armed with the information of what happened last year, but you come armed with the information of what's going to change this year. I think that's the biggest miss for people. Is they hand you the 1099s and the W-2s, but they don't give you any insights into what might change. And everybody always works off the expectations. Well, if this is what my taxes look like last year, they're obviously going to look like that next year. Yeah. When in reality, that very rarely is true. So really good point you made there. Appreciate that point.
Yeah. And we focus on planning so much, and we do a lot of that across the year. But the sooner you can do that, right? Starting in January, starting earlier, giving your accountant the heads up. And, maybe in the middle of tax season, they're not going to be able to run a whole tax projection for you, but at least starts that conversation and primes you for, hey, once our taxes are filed, let's revisit and circle back at what the coming year is going to be.
Yeah. Perfect. Love it.
Yeah. All right. So Brad, next one's for you. What accounts or contribution decisions should people be reviewing now in January?
I think the big one is kind of like 401k or employer-sponsored type plans. Usually every year, not every year, Carly, but usually every year, there's an increase into the amount you can put into plans like that. And so understanding what that number is and making sure that, if you're one of those people, as an example, that's trying to max out a 401k, 403b or something like that, and you put in last year 10% and that would have got you there. Maybe this year it doesn't, because they've increased the contribution limits. And so reviewing that early in the year is important. Reviewing how your match comes in the door. This is a big miss for people. And what I mean by that is there's some employers, not all, so I don't want to freak out all the listeners, that they give a match of a percentage or something like that, but it's only like when you put money in. So if you're the person that races to the max, and so it takes, let's say it would take you 10% to max out your 401k. Instead of doing 10% all year, you do 20%. And so you're really only contributing the first 6 months of the year, and then it's full and you're done contributing. Well, you might have just missed some of the match. If you raise too much money in and the employer's only putting in certain amounts per paycheck, and you get paid 24 times a year and only contributed 12 times, you only got the match 12 times instead of the 24 times you could have gotten it. And so reviewing that, making sure you understand your plan. It also, sometimes employers change plans year over year. And so just making sure we understand the 401k plan. The biggest one there and the most obvious one that we run into is just contributions, the limits and what that looks like. Also, usually, not always, it's a good time of the year to look at any bonuses or raises or anything that you got, from your employer throughout the year to make sure that we're maximizing and that, again, contributions match to go along with that. But the bottom line is whether it's employer-sponsored plans or it's just your overall savings plan, that's great to review wherever you're putting money. Because HSAs have contribution limits, your own individual IRAs and Roth IRAs, reviewing income for the year. To your point, if you've gotten a pay raise or bonuses, maybe your eligibility for something like a Roth IRA is starting to go away, and we don't want to have to re-characterize contributions at the end of the year because you made too much money. And so that overall look at your income relative to your savings, it's just a really good time of the year to review those things and make sure it all lines up the way that we needed to or wanted to.
Mm-hmm. I was gonna say also the buckets that people put things in. So, maybe you're maximizing your 401k contribution, but some of that should now start going to Roth rather than pre-tax. Yeah. And reevaluating. A lot of times we do set it and forget it. And so you're right. January is a great chance to just make sure that you've not only adjusted the dollar amounts, but even the buckets for where those dollar amounts are going.
Yeah. I mean, the question you asked me was specific to savings. And so that's why this question, we're focusing on that and not just the spending side of it, because that's different. But it is funny to me that both can be true. Said differently, if you don't revisit it, you could be undersaving throughout the year without realizing you're doing it. You could also be oversaving. Now, that seems ridiculous. But like I said before, maybe you're putting too much into the 401k that it's going to max out too soon relative to employer match. Or maybe you're funding a Roth IRA when you can't be or shouldn't be, or you're putting too much in and you're going to have to take money back out at the end of the year. And so just making sure that stuff is in line is a good place to start the beginning of the year. So let's move on to question numero 4. All right. The question is, what benefits, Carly, are often overlooked areas that people should review early in the year? I don't know if I said that very clearly. Let me try one more time. What benefits or overlooked areas should people review early in the year? Does that make more sense?
Yes. Yeah. Well, we have kind of a few items that I was thinking about, but also some of these might be year end. Like some of them might need to be done in December. Like one of the ones I was thinking about was like your health plans and your FSA versus HSA. But a lot of those renewals happen in December for January. So depending on when your company's plan renewal is, those elections might not be able to be changed in January, but it is, whenever that renewal happens for your company, a chance to look at like what actually are the health benefits, what's the plan I'm enrolled in, what are my options, does that make more sense to have an FSA or an HSA, and how do I optimize that and maximize my savings in either one of those options? And as you mentioned earlier, those plans have annual limits that tend to increase every year. So it's also a great opportunity to revisit where are my annual limits for, contributing pre-tax to that HSA. What does my company allow for FSA dollars? Do they match FSA dollars? Do they match HSA contributions? All of those types of things. And they do reset on an annual basis. So I would say at least
January is probably too late for that kind of stuff, right? You need to prepare, like I was talking about earlier.
Yes.
With some of that stuff, it's usually a fall decision, but it's looking forward. So it's not looking, you don't prepare in the fall for what happened throughout the year. You're preparing in the fall for what's coming up in the coming year.
Sure.
So point well made. But there's a couple other things I know you got on your list there, so I'll let you keep going.
Also looking at, your beneficiaries on your retirement accounts and your life insurance. Those are another ones that we often tend to set and forget. Never go back and look at. So it's just a nice checklist item, start of the year, look at what you have listed as beneficiaries on those accounts and those policies. And then, reviewing your insurance coverage. And, we work a lot with life and disability insurance, but it's, you could take a look at your property and casualty insurance too. If you've got kind of an annual checklist of timing and when's great to look at those things, doing that in January at the start of the year and making sure your coverage is appropriate and makes sense is a great way to get ahead of the year.
I would say a New Year's resolution for everybody every year should be, I'm going to peek into my financial life and make sure that the easiest of easies, the blocking and tackling, are taken care of. These things that you just got done naming, retirement account beneficiary updates, life insurance beneficiary updates, or just reviewing coverage on life insurance. Do you have enough? Do you have too much? Because life insurance is one of those things in life that ebbs and flows relative to need. Same thing with disability insurance. Super simple. super simple to do. And it's so simple, most people never do it.
Yep.
And so use the beginning of the year as your excuse to not just look at your budget with your family, cash flow and that kind of stuff, but this kind of thing. It's very simple. I've got so many stories, and I won't, I don't want to make a 5-hour podcast on this, but I will share one because it was very early in my career and my, financial services career. So this is almost 20 years ago, but I'll never forget it because it like freaked me out as a brand new, newly minted financial advisor. Had a client of the firm I was working at the time. It wasn't my client directly, but a client of the firm I was working at the time that passed away, and pretty unfortunate situation too. Wasn't very old, and he was on his second marriage, remarried guy, very happily remarried. But him and his first spouse didn't get along at all. Like they were mortal enemies.
Okay.
Didn't review benefit, like redid the whole plan, like new trust work, new will work, all that kind of stuff to make sure that spouse number 2 was going to get everything. And when he passed away, what they realized was he missed something. And what he missed was a beneficiary designation on a previous employer's 401k plan, like an old orphaned 401k from an old job.
That he had never rolled over and...
Yep. It was just still sitting there. And he had, not only was it just still sitting out there as this orphan 401k, he had never updated the beneficiary designation on his to-do list to make sure that all the new stuff goes to wife number 2. Never crossed his mind. He just kind of forgot about it. It takes 10 minutes to update a beneficiary designation. And ultimately, it's a trump card at death. And so spouse number 1 got that 401k account. He would roll over in his grave if he knew that. Because again, anyway, it stuck with me about how important it is to make sure that stuff is exactly the way that you want it. And life changes. And so you get a lot of people, Carly, that are just like, it's not that big of a deal. Or it's probably okay, so I'm just going to leave it alone. I would tell you that every year this should just be part and parcel of your to-do list every January. Just make a time. This one technically doesn't have to be January, so we could kind of fudge it and just put it somewhere in the year. But do it. I will also tell the listeners, Carly, and I think I talked to you about this. I just reviewed all my property casualty insurance. Did I tell you this?
No.
Holy cow. Home insurance, car insurance. If you've got any toys, like trailers, we live in Minnesota. Everybody's got some sort of trailer, whether it carries a boat or a side by side or just leaves, or just whatever you have, all that kind of property casualty stuff. I hadn't reviewed mine in a couple of years, probably 3 years, actually. Big difference. I just got way better coverage on my home, way better coverage on my cars, and I'm paying less. Because in the state of Minnesota, if you haven't noticed, the premiums are skyrocketing.
Yes, they really are.
I will tell you, I personally just did this, and it was an exercise that was well worth the time because I'm much better covered now and am paying less.
Yeah.
Very rare circumstance in life, Carly, where you get the best of both worlds.
Yeah, it's true. It's true. Very true.
All right. We're on to question number 5. And I think this is your question for me, so fire away.
Yeah. Well, I think this one's interesting because we were just talking about how, some of the things that are on this list you don't technically have to do in January.
Yeah.
But we put them on this list for a reason. So Brad, what mistakes do you see when people wait too long to plan?
I think we could do a whole podcast episode just on that question. There's a lot there. I'll give the less obvious one first, I think. And that is letting, I'm going to use a $5 word here. Are you ready? Letting inertia dictate your financial decisions. Once things are in motion, people like to leave them in motion. And if there's not pain felt, we just don't, we tend to not do anything. And unfortunately, sometimes that means we miss opportunities. The opportunities aren't because, we don't feel the pain. It's just we're not making things better. They're good. It's not that we feel pain necessarily in our life, and whether it's, again, cash flow, savings, the returns you're seeing in your investment accounts or the tax bill you're getting at the end of the year, it all feels okay. It just could be a lot better. And there's just not a lot of people that if you said to them, hey, any chance you want to pay less in taxes? They'd be like, nah, I'm good. I'll pay more, or, hey, any chance you want to pay less for your insurances, or, any chance you want your returns in your portfolio to be better than they are, or reduce the fee? Like everybody, I want to do that. But if you don't know what you don't know because things are just in motion, you don't feel pain. So even when things feel okay, you should review them, if that makes sense. So that would be number 1. missing contribution opportunities. To your point, you mentioned it earlier. You have, if you're still in savings mode, you can go back on employer sponsored plans, individual IRAs, Roth IRAs, things like that, and contribute for last year. But you can only do that until a certain window of time, typically, tax filing deadlines. Again, you made the point, unless you file extensions. So we want to make sure we don't miss that kind of stuff, because maybe you do want to do that, or maybe there's room inside of, your 401k or Roth IRA or something like that we want to fill up. And then from a tax perspective, it's, you get close to that deadline and you don't ask any questions. There may be planning opportunities that we miss there as well. So I think I'm always the person, Carly, that tries to get in with you, the CPA, as fast as possible, which is usually early February. But I'm the guy that's like trying to take the first time slot because I just know then that gives me more opportunity, more runway to ask the right questions. But also, to your, another great point you brought up before that I already doubled down on, that I'm now going to triple down on, an opportunity for me to kind of tell my, my tax team, like, what's going on, like, and what this is what I think this might be changing this coming year, and how do you prepare me for that? Especially if you're self-employed. The one thing that's really a bugger is you get to April 15th and you have to pay that last, true up. If you owe taxes, which if you're a smart business owner, you owe taxes. Because you're paying as little as you can throughout the year without penalty, and then you true it up. But that first quarterly payment is also due.
Yes.
So it's like a double whammy. And if you wait until March or April, like to really dig into that, to figure out what that looks like, that can be messy. And so there's just a lot of things out there. Actually, I'm going to add one more. I was going to kind of leave this, but I think it's worth mentioning. The other opportunity, if we don't set the right trajectory at the beginning of the year, like I said before, the market goes up and down every single day. And if we start to set the trajectory early in the year of what we want the year to look like, we have the opportunity to take advantages of the volatility in the stock market. Volatility is not necessarily always a bad thing. There are ways to take advantage of the volatility in the market, but if we don't have a true north defined for the year, we don't know what we're trying to take advantage of.
Yeah, I've seen you do that really well on the wealth management side. Timing Roth conversions when the market's down, and for those clients, that was always the plan, right? Like we were going to do Roth conversions in the year, and then we get to say, here, we made this plan already for the year. Now we know we execute at the right time in the market because we had laid this plan and this framework early on.
Yeah, Roth conversions are part of that overall tax plan that we were talking about before. That's a really good specific example. I appreciate you bringing that up. And one that's, again, you have the right trajectory set. You understand if Roth conversions make sense for your family, at what level they make sense for your family. It gives you that freedom to start those Roth conversions earlier in the year based on market conditions. Because typically we wait to the end of the year to do that because we just want to let the year play out. But to your point, and it's a good point, if we've planned early in the year, it gives us that latitude. And we did it last year. I don't know if unless your short-term memory is horrible, we all remember that in April, the markets were not good. And by not good, I mean they were really bad because of the whole tariff uncertainty. And so they were tanking. Well, lemon's lemonade. What's the lemonade? Well, take money out of your IRA when it's down, pay the IRS off when the account value is down, move it to the Roth, and let it rebound without having to pay the IRS part of the gains that come back. And so it was a great opportunity for those families that into last year, in the beginning of this year, did the proper planning, so we knew where we wanted to be and where we're going to end up. So thanks for that. Let's move on to the last point. And I'm throwing this one to you. Instead of resolutions, even though I brought that up before, I'm kind of contradicting myself a little bit, but I'll tie that together here at the end. What's a healthier way to approach the new year financially?
Same or true of all resolutions, starting with small, like incremental improvements. The things that we have on the list, like reviewing your beneficiary designations and checking in on your plan limits, those type of like checkup items, we said earlier, they take 10 minutes. They're really small, but they can protect you and protect your family and your assets. So they're really important. And I do think sometimes that, when we talk about financial planning, that it can get really overwhelming fast for families to think about all the different things that they need to do. But there are a lot of little things that you can do that do move the needle. And so instead of getting overwhelmed, to just look at like, what are all these small kind of checklist items that I can take care of and really take care of in a pretty like easy and pain-free way. So I would definitely focus on small improvements. And then the other thing I was thinking about was really like focusing on, systems, and that it's kind of ties in, but like not everything has to be done. But if we can start to work our way there, and our families have such great resources on the wealth management side, and we've got wealth.com and the ability to serve families and help put like higher level items in place. But there are a lot of things that we can do pretty quickly. And so the more that you can start to systematize, I love the idea of kind of calendaring some of these items so that on a regular basis, it does kind of become a part of your life to check in on them. So whatever that is, maybe it's not January for you. Maybe it's a different time of year. Maybe January is hard with work or what you have going on in your families, but like coming up with a way that you put time down, like broken out on the calendar to address each of these items. And then really just trying to look at like, how do you kind of align your money and your financial goals with your real life and not with the trends. Like it is really easy to hear like the next, I better buy silver's up or whatever's going on. And so just, just resetting, I would say using January as a chance to go back to like, what are our family's goals? What are our vision? We talk a lot about vision on the podcast and vision for your life and for your business, and aligning those money goals and the moves with your real life and your vision, not just with what everyone in the world's doing around you.
Yeah. And your values. It's interesting to me that if you're not doing planning and not thinking through things intentionally, how far away you can get in the way that you spend money and the way that you live your financial life from what you actually value. I love the exercise of going through and like just writing down where you spend all your money and then like looking at the list and going, is that stuff I even like? Like, and then comparing that to the list of all the things you want to do in life. Like, and what do you value the most? And just making sure that those two things line up. If they don't line up, then start the process of changing it. Now, it may take months or years to do that. But the idea or concept of starting somewhere, just because the list may seem daunting and you're like, holy cow, it's like 15 things they talked about. I can't do all of those things in January. It's okay. Create the to-do list and the great time to do it. So maybe January at a minimal, start somewhere. Maybe that somewhere is just creating the list of things that need to get done, so that it's at least written down somewhere. Psychologically, they'll tell you you're like exponentially more apt to do something if it's written down somewhere.
Yes.
The second thing, psychologically, that will help you achieve some of this to-do list is to tell other people about it, to be accountable to it. And so that's where we can come in. We can help you curate the list. We can help you be accountable to the list. We can maybe add to the list some things that maybe you're not thinking about, or take things off the list that just you don't need to do or you don't think you need to do, or maybe you're already doing and you don't even realize it. But at the end of the day, we can be a pretty valuable resource in just helping you think objectively about your own situation. One of the things that's been super important to me over my career, Carly, is having people like you on the tax side or other financial advisors speak into my own personal life financially, because it's impossible for my wife and I to be objective about our own situation. Of course we're subjective. It's our money, right? It's our financial life. And so that objectivity to me is very, very valuable just to me personally. And so, because I've seen it in my own personal life, how important it is, that objectivity to start the year can be beneficial to, I think, anybody. So you don't need to accomplish it all, bite sizes in January, but start somewhere. And maybe if you're listening and you're not working with Fiat already, and you're not, planning with your financial advisor, you're just doing asset management, they're just managing a portfolio, I encourage you to reach out. We can help you kind of start some of these planning items that we talked about in today's podcast. So January, said differently, is about kind of laying that foundation. When you take a little time now to prepare and ask the right questions, the rest of the year tends to be a lot more successful. We know that. I mean, we know that. I say that, but we know that is. And you listeners, you know that. Whether it's your financial life, your physical fitness, your, whatever, that laying that foundation, taking that time now can compound over time. If you're unsure where to start, like I said before, or you want to start making sure that you're using right strategies with your situation, now's the time to start that conversation with us here at Fiat Wealth Management or on the Fiat Tax side. Either way, we would love to be that resource for you and your family. Thanks for listening. Hopefully this was a great way and a great reminder as we jump into this new year of what to be thinking about financially. Carly, thanks for taking the time to be with us today. Listeners, thank you for being with us today as well and joining us on Retirement Redefined. Again, I'm Brad Gotto, Carly Carlson. If this is your first ever episode you've listened to, I would encourage you to subscribe to the podcast so you know when we drop new episodes. And hopefully we'll see you in a couple of weeks.
Thank you for listening. Don't forget to click the subscribe button to be notified when new episodes become available. The information covered and posted represents the views and opinions of the guests and does not necessarily represent the views and opinions of Fiat Wealth Management. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional investing advice. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investment planning.